Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's March 8th. This will be our chart lesson for the day. And it looked like we were going to rally out of here early this morning. We were trading way up here, open down here, traded way up here. It looked like it was going to be a reversal, but you can see we found resistance right at that support line, and now it's acting as resistance, and we shot straight down and closed almost on the lows of the day. So I think we're still headed lower. I really do. There's one thing I don't have on here. There is a bit of a channel working down here, you can see, and that's the first break. So we may be headed to make that new low, which would give us this first measured move, and we may even head on down to the next one. So I just want to throw this up for those that don't know. Before you ask, this is our envelope strategy. So people always ask me what that is if I don't explain it. So it's a you can find out more about it on the website if you're interested in it. But it's a indicator that we use, and just kind of gives us oversold. And we can see we're way oversold here, but that doesn't mean anything. We got way oversold over here. We got way oversold in here, but you do see how we rallied out of there really strongly. So at some point, we'll probably rally up out of here strongly, even if we're going lower. So, and it's very possible too, I don't have it on here, that there's a bigger channel. But if you look at this channel like this, we've really already had a break and a new low. But sometimes you get two legs down to a new low. So we could make that measured move and rally out of there, and that might be the end of it. I'm not ready to call that yet. I think we're still headed down, and with all the bearish news hanging over the market, anything could happen. So I just wanted to show you this for a kind of a larger picture look. But let's go to the intraday chart and go through the trade. Okay, here's our intraday chart. We had a few trades today. Some wild, crazy swings. This was a really strong trend. Looked like we were going to rally out of here, and before you know it, we've got two legs back down, and we're right back testing the lows again. So I'd call this a range day in the end. It's not really a down day. It's definitely not an up day. So it's just a range day. We had a huge rally up. We kind of chopped around early on and had a huge rally up and then had a huge rally down. Actually, twice we had two legs down basically. So we didn't quite get a measured move. So we could bounce out of here. This is pretty strong support. You can see they tested it multiple times, and we pushed through it here, but it didn't hold. Or the resistance or the support still held. We got a little failed break lower. So far it's holding. So we'll have to see. But there are a few trades today, a couple of really nice trends in both directions. And so real quickly while I'm thinking about it, every now and then somebody will say, with the high volatility, why don't we go to a bigger tick chart? And you could do that if you wanted to. At times in the past, we have tried to adjust the tick chart to the volatility, but it just got to where it's changing so much. And, I still think this is very tradable. So I've just gotten to the point where I think it's better off just to stick to one chart, and then you start to learn that chart in the fast times and slow times, and if you're always changing it, then you're slowing things down. If we go to a bigger tick chart, it will definitely slow things down. I don't see a problem with doing that, but personally, I'm not going to do it. I'm just going to stick with what we got here. I like trading this 2,000 tick chart, and while it's definitely a lot faster than it was in lower volatility, I still like trading this chart, so I'm going to stick to it. But you can see the big picture there, mostly sideways. We did close on the lows though, so this looks like a big reversal type bar, but in the end, it's just a range kind of day. So we could go low. Like I said, you saw the daily chart. We could still go much lower. Looks like a really bearish bar on that. All this price action looks like a large bearish bar on the daily chart. So let's zoom in and go through the trades here. And you had to be real patient. I didn't see a trade I really liked until really almost a little after 9. I mean, there's a couple of green ones in here, but I didn't see anything I liked early on. It was just kind of hard to, we're just really kind of going flat here, and you did get a couple of trends up and down, but you just didn't really get a chance to enter them. Nothing safe or concrete really. So 7 o'clock came right as we're making this break and turning down here, just kind of as we're going sideways there. And so no chance to really enter that to the downside. And I don't see anything down here that would make me want to go long. We do get a reversal here. This is a double bottom, and you get a first entry, and then you push through and pull back and get a second entry. So if you took that one, you might even could argue for that to be, um, you might even could argue for that to be, okay, I'm sorry, I had an interruption there, and I got distracted, and we were talking about this trade. You got a double bottom with first entry, second entry, so it's a failed second entry short, and you would be possibly looking for a bounce down here. We're not back. I mean, we were trading this range here. If you pull this on across, we failed out the top. Now it looks like we failed out the bottom and got back inside. You can kind of, oops, you can see how we bounced right off that right there and went higher. So you may take that trade. It got a little dicey. It pulled back, but it still would have worked out. And then it comes back and it runs all this time. We're just kind of chopping along here. But there's no reason not to really like that trade other than this looks a little sideways here. I didn't really mark it as such, but this is definitely a little bit of congestion right here. And so on a breakout, you could fail, and we didn't really come back and test it till here. So that's what prices are almost always going to come back and test these areas. And so you can see that happening right here. Even though you could have traded that trap, it still comes back and tests that breakout area before it tries to push higher. And it actually comes back and tests it again before it goes higher. So, and it looked like here we were going to go lower. So you got to be real careful on these breakouts because prices generally come back and test them. So, and here we broke lower, so you'd expect prices to come back and test that. We actually got back inside there, so I thought we'd probably go back to the highs, but we didn't. We just kept chopping around. We came back and tested this a few times, and then we kind of got in this range. And at this point right here, you would have been playing this a little lower. I had this here originally, and I didn't move it up until we got more price action up here. But you would have been playing that right along in there. I still don't see any setups that changes anything. There's no setups to go short here on the failure down here. It's too congested. We know why you're getting congestion, but it's still risky to try to trade it back to the EMA. You know, if you want to be a little aggressive, you probably could, but I don't recommend it. And then of course, once we went higher, we moved this up and you can see the resistance moved up. Actually, I think I was playing it right along there. And so we turned down here. Again, no setups to go short here. And then we bounced. Now, this one, normally I would say, hey, if we had a break of this trend line and a new low, I would say you might risk this to ride it back. But since this channel is still in play and it's fairly strong, I think it's a little risky to trade this. Wait on a higher low and you get that, but now it's right into the EMA. So now wait on a reversal and you don't get one. It just runs all the way to the top. So you get a little two-legged pull back here, but no setup. Then you're just kind of chopping along in congestion again, and it finally drops lower. You get a failed second entry long here, but you got to go short right into the support, and it doesn't really set up like a failure. I don't see anything. Finally, you make a new high, and then you get a first entry, second entry here that fails. So the failure actually occurred right below that bar, so your entry would be one tick below this bar, but your stop has to go above the signal bar, which is the bar that makes the swing high. So it'd be above those two bars. They make a matching high there. So I always put the arrow above or below the signal bar, but sometimes we don't enter below the 9 out of 10 times you're going to enter below the signal bar, but on a trap it could be a little different. Or if there's an engulfing bar, it might be a little different. So this turns out to be a great move, but it's just not a high probability setup. So I'm going to mark it green. And of course we bounce down here, but notice you get a new low, first entry, second entry. So now you got a good failure after a move down. There's a close outside a new low. It's very questionable if that's a convincing one, but obviously it was convincing enough because this thing rallies up. And if you're not skilled enough to trade a failure, you still get a nice second entry right off the EMA here with a nice, it actually broke lower and traded down, then turned up. That's a nice second entry long right there. You could trade that on the engulfing bar, but I'd wait till this close and just trade that as either way is fine. You could mark it blue either way. And of course now it runs straight up for a quick move. And that doesn't look like a very big move, but if you just move that up to the first bar that breaks lower, I mean, that's a 12-point move on one contract. That's $600. And then it turns straight down again. But you don't really get a chance to make a good short here until here. You might have, you could look at this as a first, second, and then a third test. And it's right off the EMA, and it does confirm that trend line on a third test. Fairly bearish bar. I like that one. There's plenty of room to scalp out there. And again, you get a nice, easy move with a fairly good, strong chance of having a runner there. So that's 14 and a half points, almost 15 points. They don't like big moves, but this thing's just so volatile. These are huge moves, and so you get these really nice runners off of them. So then we get the first break. We don't quite make a new low. It's too congested here by the time this second entry, really the second entry short triggered here in the inside bar. You can't take that, and by the time anything else triggers, you're sideways, and then it breaks out, and it actually comes back here. This is basically a double bottom, so you get a first entry, and then you get a second entry. And even though okay, we had another little interruption there, sorry. I think we were talking about this trade right here. But yeah, this is basically a double bottom, so first entry, second entry. It was a failure when it broke higher right there. And this was an engulfing bar. I don't think I would wait to go long up here, but if you want to be a little more aggressive and trade the engulfing bar, when it actually became a failure when it broke above this bar. So that's really where you have to enter. And because this is an engulfing bar, it makes it even more risky than just trading a failure. So for that reason, I marked it green. But I like that trade. And it's probably going to trap some shorts after this big move down. Actually, you've had a couple of big legs down, and you don't quite have a measured move from this leg on down. This was a measured move from this leg. We actually went a little further. But you would want to go ahead and measure this next leg too and look for a possible measured leg down, and that would, I couldn't figure out why this wasn't moving, but this is because this is the second leg of another move. We'd have to draw a new one here, but I'll just draw it real quick. I'd start with this leg. Leg one, and then leg two. And a lot of times when you don't meet a measured move, you get a big rally in the other direction. And you can see it took it a minute, but we did rally on back up a little bit here. And it wasn't long when we couldn't go any lower and still couldn't get there. We made this huge rally up. And that's kind of common. So, but anyway, nice reversal there. And then you get your break, and you actually get a second entry long here with still plenty of room to get out. Another nice little move up there. And then the bottom just kind of falls out of it. And you get a first entry, second entry, big bearish bar. I like going short there. And then you actually get another, actually, if I remember right, no, it did break lower there. I couldn't remember if this was the one where it wasn't a second entry and it was a failure, but no, this is the second entry. And then this is just a double top lower high. And then you get a triple test. So I like going short on any of those. There's actually you might look at this as a failure here, but that's too congested and you don't have much room to the lows. But when it comes back here and you've already pushed lower, so now you got plenty of room and you got a true triple test across there. This was the better place to enter. And you could actually look at this as a double top, first entry, second entry, and this kind of has some bullish bars. So there's probably going to be some trap longs there, and that just drops on down. You might say, hey, there's a failure here, but we're not back to the EMA. It's a break already of that channel. I don't like going short there, and it could snap back to test this. This is actually a little bit of a range here. So, and you may snap back to test that breakout area. So you got to be careful with that too. But it runs on down, it bounces. You might say, hey, this is a triple test, but that's just a little too far back. So I would just look at this as a new low. And you might even risk that back to the EMA. I mean, that's one of those where you might catch an important low. I talk about these all the time. You've got two legs down here. You've got two legs based on these. You've had a break of this channel and a new low. And you're way away from the EMA. So you may risk that. If you're going to take risks, that's the kind I like to take. um, just simply because you got all that room. And a lot of times these make important lows, and if it's a breakout the high, it makes important highs. And and you can see you probably wouldn't have got a runner here because it does come back, but sometimes you'll catch this move, so it's worth risking. But it really looks like the smart traders didn't enter till here, to be honest with you. We didn't really take off there. It did. It looks like we're going to go lower, and that's tempting to go short right there. And you could have taken that, but it just looks too sideways, too congested. I don't like it. And even though it would have worked, it could have easily turned up earlier than that. Um, and you might have even, this is close enough, you might even said, hey, this looks like a triple test, because you got test, test, and we didn't quite get there, but it's close enough. And with that big bearish bar and not going any further than that, you can see that sideways, so it's really like a little range here. We're at the lows, so you might risk that. I didn't mark it, but it's one you could argue to be green, and if you catch that, you really got a roll going here. But notice you got a big move up, you get a first entry, and then you get a second entry. So when that broke higher, that's a failure. It doesn't really look like a great failure because it's just almost one move straight up, but it's still by the count, and it's still, you could expect prices to retest this high because you see that little channel working up. I didn't color this one. Some of them I did. It was so many of them I didn't color them all. Let's just color it so it's easier to see. And you got your break, so you expect prices to make a new high, and instead prices spike and go straight up. Now you'll notice here, look at all these green, and normally you won't see me mark these. I'll talk about them a lot. This is a super strong trend. And notice there's no corrections. The corrections are just a tick or two, and it just keeps going higher and higher. When you see that kind of trend, that is a super strong trend. It doesn't look like it, I know, but if you recognize this, you can just about trade any bullish bar that comes back to the key entry point. And notice if you traded any one of those, you would have got a scalp. Even the one that fails here and doesn't go higher and break, and you get a break, you still get an easy scalp out of it. Those are super strong trends, and there's no real way to get in these. If you didn't get in here, which this one's borderline, you could almost say, hey, this could be blue. But if you don't get in there, these normally wouldn't qualify for an entry based on our strategy. But when you recognize what kind of trend this is, and you see this spike in channel with this trend line working up, look what happens every time price. You can't get a correction that even goes up more than a bar or so until it finally gets a correction and a break, and then you still get another big move higher here. So there's still some even though the momentum is not this strong anymore, you're still getting some buying and some strength, and we're still going higher, and probably what prices are doing, well, actually no, we already surpassed the high, so they're not going to, we're just trying to make a new high, and the momentum's still strong is basically what this looks like here. So but notice we rush up, and you might have looked at that as a failure, and if you traded on the engulfing bar, you probably could trade that. Let me zoom back in here. But notice the new low, first entry, second entry, and it broke lower and turned up. So you might trade that. It's another one you could argue to be green. I'm not crazy about those engulfing bars. I don't think you want to go long up here. I think it still would have worked, but I don't think I'd take that trade. But notice you come back and you make another bounce here, but you don't get a setup to go long. But we're kind of working sideways. Then you get the triple test way down here, way away from the EMA. And so I like that one. Just a ride to make a new high here, but this thing kind of pushes on higher. And notice what happens. We push straight through the EMA. You pull back, first entry short, and then you pull back and get that little second entry short trap. So if it breaks higher there, we're probably going to run to a new high, make another leg. You think it would probably make another leg like that, but it actually goes much higher. But even if you get a leg like this one, you're still looking at a 14-point move. So 14 more points there's, if you can just get a piece of it. I don't think I would enter any of these others up here, even though this is another strong trend up. And you probably could get a trend line off of this. I didn't even draw it. Normally I don't draw the trend lines on the retest. But yeah, you can see that. And it's the same thing. It's a continuation of this. And you can see any bullish bar that came back that made a break lower, you could trade higher. Even the one that broke right there, you could have traded higher. There's one, there's two, and then there's the third one that broke lower. And you could have traded any of them higher. Of course, you do get the break of that one in a new high, and you find the resistance up here. Notice you got a new swing high there. I don't see, there's a failure right here, but I don't think you want to trade that. If you did, it worked. The failure really occurred right here is the reason you can't take that one. You could look at that as a second entry, though. Looks a little congested, a little bit of stem. If you took that, well, actually, the reason you couldn't take that on a second entry is because this is your signal bar and it makes a new high. This one doesn't. Let me zoom in here. I'm sorry. But you could have said, hey, it's a failure too, and maybe taken that trade. I'm not crazy about it. You could argue for it. But if you just wait, you make a new high here, then you get a first entry and a second entry, and it makes one tick higher, traps people, fails, and turns down. I don't know. You could enter this on the engulfing bar, or you might just go short right there. Either way, this leads to a huge sell-off. And this is the same thing as what we had going up. This is a really strong trend, but unfortunately, you don't get anything that breaks higher with a good signal bar all the way down, so you can't even get back in that one. Because the shorts are where the strength is at. To be honest with you, I was a little surprised. I think this is mostly stop running. They just, once they got the momentum going, they just kept running stops all the way up. And people got scared and started exiting. But the only thing you might trade here is a triple test, but I don't think you got enough room to really risk that, so I don't like that one. But if you wait a minute, you make a new high here and you get a first entry, second entry, and it breaks lower right there. So when it does, that's a failure. And off it goes again. And again, you can see there's a real short-term trend line kind of working down through there. And it's the same thing. Any bar that gives a little correction that's a signal, that gives you a good signal bar, you could have traded. None of these break lower here. So, but you could have traded any of those as well. And we rally. Pull back, first entry, pull back. There's a second entry long there, but that's the first. We got to close outside. Let me color this one just so it's easier to see. Okay, you got to close outside and a good move down. So you're looking for a reversal here. I traded this one as a failure. Notice first entry, second entry, and so you may take that as a failure. Notice it didn't go very far before it bounced. It didn't really trap a whole lot of people. But it still sets up and looks pretty decent for a failure. But notice we don't go notice you got a leg down and then you get a two-legged correction, so you're probably going to get another leg down here. So that one is tempting on a second entry, and you might even argue that's a triple test, but there's a little bit of a support resistance line there, and this is above it, so I'm just a little hesitant on it. And then you make this triple test way down here, way away from the EMA. Now you got some room to trade back. Here you just don't have much room, nothing into the EMA, and so it's just a little risky to me. But I like this one. If you want to be aggressive, again, you might catch a low. And notice we catch another low here, and we're moving higher again. Unfortunately, I don't see anything else here I would want to trade to try to catch this move up. You come back here and you get a second entry, but your signal bar is no good. But finally, you get a higher low with a good signal bar. It is a little bit congested looking, but I think that's going to trap people right there to the downside, and you can see how that rockets up. And you're looking for a new high anyway. So after two legs of correction, we might even see a measured another leg up, the measured leg. Doesn't happen. We just make a new high and then we sell off here. But there's one more final reversal, and this reversal sets up nicely. The only problem with this one is it's a engulfing bar. So notice you're moving down, you get a first entry, you're moving down, you get a second entry. And I don't know which way this broke. This was late in the afternoon. I was not watching the chart at this time. I don't know if it broke lower or higher. I'm guessing it broke lower and then turned back up. So when it came back down and went through again, you could trade that on an engulfing bar. That's where the failure happened either way. So even if you enter this, you got two options here. If it turns out to be an engulfing bar, generally what I'll say is move your stop to the last high, which would have been here, and let this bar complete. And then when it completes, you move your stop down to here. That's generally how I would play an engulfing bar if I got in on it, knowing it's an engulfing. You could just let it stop you out right there, but this just looks like a really good reversal. So I would probably play the engulfing bar and leave my stop up here if I'm going to take it. This late in the day, I mean, that's a great setup for a reversal. I mean, it breaks higher here. The problem is it's not a real convincing break higher. It still looks like all one move down. So it doesn't set up as a really great, by the count, it's a reversal, and you're looking for a reversal here. So I wanted to talk about it, so I marked it green. But that's, if it did break lower first, you could have got stopped out right there if you put your stop one tick above like we teach, and then it goes exactly where you thought it was going to go anyway. So that's why you want these to set up properly sometimes, because you'll get tricked and fooled there. And I mean, that's the name of the game, is tricking people. So technically, to me, this looks like a leg down, a correction, second leg down, second entry, and then your failure right there. But that doesn't set up properly either. So, but that's what I saw for the day. And a little more trades today than what we had yesterday. This was a really nice move if you could catch any of it. But yeah, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.